Preview.
What percent of deals are successfully exited from the time an investment banker is engaged? Is there a rule of thumb or vice versa, which ones fail? Because I want to go down that path here a little bit. Any thoughts on how many actually successfully go through from the time an investment banker signed on?
That's a tough. I'll just jump in, but tough. What happens at Intrepid may be very different than what happens at other firms. But I think we've looked at the statistics over time, periodically, and there's always the caveats, right? Because one of the biggest inhibitors of the deal getting done is the company performance changes during the process, right? You hand projections to a buyer, and within 2 months, you're still talking to them and you're missing them by double-digit percentages. So that's a scenario that is hard to, you have to almost carve that out. So, we looked at ours a few years ago and we were running about 75-80% close rate, with the exception of deals that had material diversion from their projections. Now, again, is that a market standard? It's hard to say. I think, the more you do a lot of the stuff we're talking about and take courses like this and get your company ready, the higher likelihood of having a successful transaction. And the other element here is, sometimes buyers get offers for deals that, is right in line with what we tell them. And it sounded good 4 months ago, and now it doesn't look as good for whatever reason. So you also have that occupational hazard from success fee driven bankers that their clients change their mind, or the market changes, in the interim, right? As has happened as interest rates went up so dramatically in the last 12 months. So there's a lot of factors, but that's at least one anecdotal point.
Yeah, John and Corey, you guys agreement there?
I totally agree that for us, where we have the only place that we've had challenges is when we brought an offer, but for some reason something changed in the seller's mind and they didn't want to accept it. So we brought them within the identified range, and then they wanted more at that point. And so we spend a lot of time up front getting real clear on where's the floor, if you will, what's the walk away point. And we do a lot of research and prep even before taking on the mandate and the engagement, because if we don't feel we can be successful bringing that to market and finding a buyer that meets the criteria the seller wants, we lose money every month because we get paid on success. And so we're losing money every month. We can't afford to do that. So the only times we've had that challenge was when our seller changed their mind.
Yeah.
I agree with everything that's been said. I just want to build on stuff that Gary was talking about for a moment. I would really agree that performance declines, financial decline during the process is probably the main thing that throws up roadblocks. And if you're a business owner and you're selling your business, you really want to hit your numbers during that process. It's probably the single most important thing. That is, in my mind, the main cause of failure. What John was talking about, where you get an offer that's in the desired range that you've discussed, and then the owner decides not to sell, which is entirely their prerogative, obviously. I don't know that I consider that a failure. That's just sort of a change. Life is change, and life is the unexpected. In terms of those performance declines, sometimes they're macroeconomic related, and sometimes they're company specific. And if it's macro related, a lot of times it's easier to work with a buyer and say, look, it's not, there's nothing, the story hasn't changed. I guess that's how I would put it. The environment has changed. Things are cyclical. It's a cyclical industry, but the story hasn't changed. So maybe the valuation gets knocked a little bit, or maybe some of the valuation or consideration becomes contingent. Maybe you restructure, but a lot of times it's easier to get something done if that's what the owner wants to do when it's that kind of environmental situation. And then if it's company specific, a lot of times the right answer is to step back and wait for the problem to reverse itself. And that's something that, a good banker will be honest about. And then I'll just say real quickly, there's the other case, which is where the business doesn't decline. It sort of really gains momentum during a process.
Yeah.
And something that was supposed to grow at 10 or 20% this year is growing at 60 or 70% this year. Then the owner has to decide, do I want to sell now? Am I going to get full value for this? My valuation has gone up, but it's only 1 year of fantastic performance that nobody expected. So do I get full credit? Do I wait a year or two? So that's another instance where changes sort of can, in the near term, change what you're doing.
Yeah.
I was just going to add one piece of advice, for business owners on the line here is, and John mentioned it, and we were very similar. We spent a lot of time up front to make sure our expectations of value are aligned with our clients. And we'll go into presentations and we'll tell a client what we think they're worth. And they'll say, yeah, we had a few banks tell us what that, but then we found one bank that told us it's worth 50% more. And, we're going to go with them because they told us it was worth more. And for us, we view that as sort of coming attractions in our pipeline, because more often than not, we'll get a call 6 to 9 months later saying, we went with the wrong guys. They kind of oversold. We should have known. And, that's another reason why deals don't happen, is that if you fall in love with the best, the banker that tells you the highest price, as opposed to the ones who maybe really have your best interest in mind and know what they're talking about, that can be a cause for failure as well. And I can think of many, many times when companies I've sold had hired a banker 3 to 5 years earlier because they didn't like what we told them then, and only to come back and say, you were right, and that's why we're hiring you.
Yeah, for sure.